Hello traders, welcome to ChrisFX. Today I am going to talk about how to spot liquidity and inducement in trading in general. And be sure that you stick around until the end of the video because we are gonna talk about the giveaway and I am gonna be showing the people who are already included in the giveaway. This concept applies to everything: forex, stocks, cryptocurrencies, index funds. Wherever you wanna trade it, it works perfectly. You can summarize everything down to just waiting, of course, but we will get into more detail. One important thing before I start talking about this concept is that we do not always need to have a huge reaction after we have spotted our proper order block or point of interest. As day traders, we can have a minor move such as this one and still get huge profits from these small movements. Why am I saying that? Because with those unlimited videos about smart money concepts, you can see people showing on hindsight that, for example, you would be entering above this area with a stop loss right here and you would be going for a 10 to 1 or 15 to 1. In real life situations, I advocate that you have to close profits. And trust me, in the end of the day, you will be making more profits compared to those people who will be going for the huge movements always, because small wins like 2.7 to 1, 3 to 1, 1.5 to 1 are accumulating into a huge 20%, for example. Nonetheless, those people who are going instantly for the 20% or the 20 to 1 reward to risk, they have to pay a bunch in commissions and they will get into huge drawdowns before this thing happens. So let's keep our risk management clear. You will not always have moves such as this one, let's say right here. And I am also gonna talk about a trade that I called in the community. I have called a bunch of trades, but I chose this one because it was a tiny movement. Nonetheless, if you follow what I teach in the courses, you would be able to get out profitable. Enough with the talking now, let's go ahead and talk about liquidity and inducement. So until now, we have learned this thing in general, and this is what most people out there on YouTube are teaching you as well, that we have, let's say, an 1, 2, 3 move. We are waiting to fulfill, let's say, an order block back here into this area, and then when this happens, we continue with our trend. This can happen, and this happens a lot, of course, but if this would happen every single time, every single one of us would be a millionaire, if not a billionaire. And trading needs to be simplified, but it is not simple at all, because you have to have a trained eye, you have to have back-tested thousands of hours in order to be able to spot things like what I'm gonna teach you right now. But I'm gonna simplify it for you, so you don't need to spend thousands of hours, hundreds of hours will do it. There you go. Now we have the same movement, let's say. Okay, have something like that. We break again above structure. Okay, now we are exactly right here. From what you know until now, it would be optimal for you to go ahead and look right here for a trade, and this wouldn't be exactly wrong. On the other hand, you have to think about it that every single person in the market probably is looking for a trade exactly right here. Not to mention, if I zoom in, that here we had another break of structure right here, more liquidity, more traders were placing their buy limit orders right here. For example, look what price did. It came back and stopped them out. So here we go, price stopped them out, then we broke structure once again right here, as you can see, and now people are expecting for this scenario to happen, of course, so that we bounce from here and we keep going. Nonetheless, more likely than not, we know that below this area we do have liquidity. This is very important because just think about it, most traders will be wanting to trade this area right here, either with a buy limit order or they will look for a small reaction in the area in order to trade it. So now we know, and I want you to do the same thing, that we have grabbed liquidity below this area. We have grabbed liquidity below this area. Okay, liquidity below this area. Down here, we are expecting the liquidity from this area to be grabbed as well. Now, this concept can continue for a little bit. More likely than not, if all of those areas are broken, now we are gonna come back and retest this area over here. Nonetheless, it's not impossible that price is gonna even do that, give you a small retracement and then go even to this area and then continue. So you have to keep in mind that this first order block or imbalance or whatever we have over here, we are not trading it. For sure we are not trading the first, so we avoid getting into losses in this area. We avoided the losses in this area. Of course, sometimes we will not be able to get into a trade because price might do that and then leave. More likely than not, it will grab the liquidity below this area. Now, most people out there look at this area over here and they see it not as liquidity, but as a change of character. There you go. They see this area right here as a change of character. So now maybe on a lower time frame, they are trying to short anything in this area right here. Price is gonna come back to our order block or our point of interest in general. They have their stops, let's say, above this area right here. They're trying to short this thing and they think now price is gonna continue or whatever they think. And then we do get the reaction from the proper order block, which is this order block right here. And then we break structure towards the upside and we continue with the overall trend. These are very important things to keep in mind. Now I'm gonna take you to the live charts, but I'm gonna take you through a difficult example, something that you might not spot instantly. And I will show you how you can get into trades even if you are getting into very tiny movements. And of course, I am updating my courses again and again with the most recent stuff, and I have so specific rules that you will not doubt at all. For example, if you are in an area, let's say, such as this one, and you are in a lower time frame, let's say 3-minute time frame or whatever, you will not doubt at all if the movement or the change of character started from here or from here or from here. And this is based on my third strategy, but this is all part of the paid course. Let's move on with this example. This is important and free stuff, and it can get you profitable as it is if you backtest it with the things that we are showing on this free YouTube channel. You don't even need to go ahead and buy the course if you backtest all of those things, but with the specific rules that I have, you will speed up the process and profitability is inevitable if and only if you follow the risk management rules that we are teaching and the exact techniques and rules as they are. Nonetheless, let's go ahead now. We are on the 4-hour time frame right here. We are breaking structures. We broke this structure right here, and we are expecting a retracement into this area, let's say. But when these new areas were formed, such as this area, for example, or this area right here, we are forming liquidity just above these areas. You have to instantly think about it like that we are forming liquidity on each and every high because we have a short bias right now. We are forming liquidity because people are shorting in all of those areas. And again, I do not claim that there is no possibility to make money out of these movements. You absolutely can, but it is way more likely that you will get into a winning setup, even if it is of small reward to risk, if you just pay close attention to grabs of liquidity. Now you can of course do everything that I teach here on the 4-hour time frame. You can do it on a lower time frame, such as identifying the liquidity on the 15-minute time frame. Of course, since we already know that we have liquidity above these areas, Which area are we waiting for in order for price to react? We are waiting for this area right here. Even here you can see that we did grab the liquidity above this candlestick with this wick. We see this small wick which grabbed the liquidity above this candlestick. According to my rules, you wouldn't be entering in a trade like that, so you wouldn't be losing the trade. Again, this example is a very peculiar example because you're expecting from me to show you, and I do that on purpose. I'm not gonna show you the perfect example where we are going up, we are grabbing the liquidity, we are just reacting from this order block and then we go, because this is not always the case. Most of the times this is not the case actually. But now that I know that we have indeed grabbed the liquidity above all of these areas, even this area, we did grab its liquidity with this tiny wick that you see right here and with these wicks right here. I know now that most people see this whole stuff right here. When we broke above this structure, they see it as a change of character, okay? Because since we broke above this area, they think that we have changed character instantly. This is also the case, but at the same time it might not be the case because we are in a downtrend since the 23rd of October. So we are thinking that we might still be continuing with this downtrend. Hence, in my mind, it is very possible that we enter this area and then we keep going. Now, I went ahead and I took 2 winning trades, which I called within this area. And before you laugh about it, just think about the fact that I'm not showing you the perfect trades which are continuing in our direction for a 50-to-1 reward to risk, and I'm keeping it so realistic here with you, so please just appreciate the fact that I'm being realistic and I'm not cherry picking the best example. Nonetheless, this is one of those 2 wins. I called 2 trades within this area, and by closing proper profits, I managed to make profit here, moved the stop loss to break even, and it stopped me out for the rest. And the second one is this entry, and this whole thing happened within minutes. We did win both of those trades. And these are trades that I called. Of course, what I did in this occasion, something that I talked about in this YouTube channel as well, I had scaled down to a lower time frame, such as this one. I had an extra confluence for which I'm not going to talk about, of course, in this YouTube channel. I'm talking about it in the course. So in case that you wonder, both trades were taken out of these areas somewhere around here, and again I cannot show you how. This was news also being released right here. I didn't have the chance to look at the news, otherwise I might not have entered those 2 trades, and the other trade was somewhere around here. So I caught those trades to the pip. The one was with stop loss above this area, so one was something like that with a stop loss above this area. Let's see if it adds up. Yep. And I just won a 2.7, so it might have been a little bit. It was something like that, and I closed like 70-80% of the trade right here and the rest right here because I just wanted to get into the second trade, which second trade was around here with a tight stop loss above this area. And the first take profit went off right here. The second one would go down here, around down here. And before you start saying what are those trades, just look at it. 2.8 to 1 and 3.3 to 1. In the past, I would have expected those trades to go to 2 million to 1. Not even I wouldn't have secured a solid 3% and above in my account, but I would have ended up in losses. So this is a double lesson for you. It's not only about spotting liquidity, it is also about closing profits in specific points, which I'm also teaching in the courses. Now let's take a look on another example on AUD/USD. If we take this movement right here, 1, we can see, and 1, then a 2, then 3, let's say 4, and a 5. When we are at this specific point in time, and then I will scale down to a lower time frame so that you can see. Since we have broken this structure, for example, right here, what are people expecting now? They are expecting a proper reaction from this order block down here. Okay, this does not happen. Of course, we grab the liquidity below this area. So I want you to always think, for example, when we have a situation such as this one, there is liquidity, and I'm going to the 15-minute time frame now. There is liquidity here. There is also liquidity down here. So now the order blocks that I would be willing to trade would be this one right here, and of course this one right here, from which I also took a trade. I did not catch this trade right here. I do not even recall why I did not catch this trade. Why didn't I see this trade happening? But again, this is the logic. Liquidity. Then we have our points of interest. We have very specific rules in the course. We see the reaction on a lower time frame, an easy 40-1 in this movement. Of course, with partials, you would be making way less than 40-1, but still huge reward to risk. What I do understand though, here below this area, there is even more liquidity, even now below this area. Look, right here, there is even more liquidity. We see a small reaction above this area, we penetrate this area, and we do penetrate this area as well. Where are we going? Of course, even though here on the 15-minute time frame we see this enormous change of character, and we are of course likely to continue towards the downside, in this short-term, let's call it, situation, we are going down here. Remember, we are not always looking to capitalize on 2000-1 moves. We went into this area, I scaled down to the 1-minute time frame with the ChrisFX rules here. I recorded a reel just like that I was expecting this thing to happen, and then this happened. I recorded the rest of the reel plus proof that I won this trade. This was another amazing trade. Even though I had missed this beautiful movement, this would have been the optimal trade from this order block over here. After the first grab of liquidity, I know that I have to have, well, I do not have to have, but more likely than not, I will still have a reaction over here because there were people going long here. So we grabbed the liquidity of those people. Hence, we will see 99% of the time even a minor reaction from this area. So always pay attention to liquidity, very important stuff. Hopefully this video clarified and simplified some things for you. And if you want me to make more videos like that, because I am obsessed with this kind of stuff, please say it in the comment section and I will make sure to make another video or even more than that. Now some things regarding the giveaway. Leave any comment you want to leave on this video and also like the video and you will be instantly included in the giveaway. When this list goes up to 100 people, I will be choosing with a random number generator 2 people to which I'm gonna give my courses absolutely for free. If your name is not into the giveaway, please send me a message and I will make sure to check it out and include you in the giveaway. And it does not matter if you are the first or the 100th because you have equal chances of winning. The draw is going to be done live with a random number generator. So this was our today's video. Even this movement I called and I managed to close 70% of the trade here before I got stopped out. This is another trade that I took. This is gonna do it for today and thank you all for watching. Until next time.